Question 3, we're looking for the ethical issues with regards to the tax saving idea, but only from a CPC perspective. So I want to go into the scenario, see what I've picked up with regards to this tax saving. Where could this impact the CPC? And then I need to just go pull the theory from the CPC, apply it using my framework to maximize marks. So I come in here, I'm looking for anything that I've noted with regards to CPC. I have said yes, CPC is applicable because Tando Tuli is a CASA. So this is going to be a CASA in business. So I already know which part is going to be applicable when I need to look for answers. And here I can see that we've made here a note associated with a fraudulent return. So there is manipulation to accounting records. I can go to my part 2 to see if there is anything there that deals with manipulation of accounting records, and then go and apply it. And then I've got your non-compliance with laws and regulations because of a CASA. What is their responsibility? So your section 260 is a given because you can see there's non-compliance already up here. I've got non-compliance with the Companies Act. I've got a potential reportable irregularity as a result. So if a CASA is aware of non-compliance with laws and regulations, they've got that responsibility. And so section 260 is a definite. I just want to see if there's anything else. Okay, so you guys, you should have gone to part 2, read through the different circumstances that a CASA in business could face, and then seen section 220, preparation and presentation of information. And here we've got, there is a self-interest, intimidation, or other threats to the fundamental principles when it comes to presenting or preparing information. And there's some examples of what could or what information you could be dealing with, and there you've got specifically tax returns. Okay, so this is very much applicable to this scenario. So when presenting this financial information, the professional accountant needs to comply with the financial reporting framework and present it in a manner that does not mislead. So these are some theory points that you're going to have to put down first. And then you're going to have to say examples of ways in which discretion might be misused. Looking at estimates or accounting policies, which is not applicable here. So there's no discretion, guys. Here is a law that tells you what you need to do. So that's not going to become applicable. So we get down to addressing the information. If the professional accountant knows or has reason to believe that this information is misleading, so this is where we are at, then he needs to discuss this with a superior and look at action like correcting this. And if professional accountant believes that it is still misleading, then he needs to consult with professional body, legal counsel, internal or external auditor. And if after exhausting all feasible options, he must refuse to remain associated with the information and potentially resign. Okay, so I'm going to have to put down all these steps and then also prove that the information is misleading to show the actions that this professional accountant is going to have to follow. So I'm doing question 3, and I'm going to state Tando is a CASA in business and has been requested to manipulate accounting information. So the invoices and tax return. So I'm going to state here, this creates a self-interest and intimidation threat to integrity, professional behavior, it is significant because a CASA in business should present information in accordance with the applicable reporting framework and accurately therefore safeguards Tando must discuss this with superior. Concern here is the superior is the one involved, so she's going to have to do something more. So she's going to have to consult with a regulatory body, a professional body. Internal or external auditors, legal counsel. She needs to refuse to remain associated with the return and consider resigning. Now I've got to go to 260 with her responsibilities because of the non-compliance. So section 260, responding to non-compliance with laws and regulations. We know there's now non-compliance with laws and regulations because this director has asked for fraudulent financial reporting. So that's non-compliance with your Companies Act, with your APA, with IFRS. So, self-interest or intimidation threats to integrity and professional behavior if you become aware of a non-compliance. So I'm going to put that down. And here's some examples of laws and regulations, fraud, corruption, bribery, so we can even make the information applicable to the examples. So what does the CASA need to do? Obtain an understanding of the matter, address the matter, to communicate it with those charged with governance, to comply with the applicable law. That's how they address it. Determine whether further action is needed. Such as informing the parent, not the case, informing the appropriate authority, and resigning from the employing organization. So I'm going to put all of those steps down. So I'm going to say, per the CPC, if a CASA is aware of non-compliance with laws, then there is self-interest or intimidation, threat to integrity and professional behavior. If no action is taken. So I need to state there is non-compliance with Companies Act in the form of director's conduct, director's fraudulent conduct, or reckless trading, and therefore non-compliance with laws. So the CASA is required to obtain an understanding of the matter, then address the matter by communicating those charged with governance, complying with the law. And then, after trying to address, consider further action, like disclosing to authorities, resigning from the company. Okay, let's go and have a look at the solution.